Hello, everyone. I'm Chris Kapches, president of Chestnut Park Real Estate, and today I'm going to present you the December market results. Uh, I got to begin by telling you that we've sort of run out of superlatives to describe the market. Its performance in December was like no other December that we've seen on record. And again, superlatives can't even describe it. So I thought maybe the most effective way to talk about what happened in December, both so we understand what the market was doing and perhaps get some insight into where we're going, is to focus on four key areas. First one, of course, is the number of sales that took place. There were over 7,000 sales that took place in December. That's 65%, and I'll repeat that, 65% more sales that took place a year before, December of 2019. Over 7,000 sales is more like a spring market than it is a December market. Previous year, 2010, we had over 4,000 sales. The year before that, we had just over 3,000 sales. So that gives you an indication of how strong the market was in 2020 in December compared to previous years. The second point worth noting is the average sale price. Average sale price increased by over 11% to $932,000. Now, there's some interesting sort of layers to that increase in the average sale price. For the first time since we've been tracking average sale prices, the average sale price in the 905 was actually higher than the average sale price in the 416. And there's a reason for that. The reason for that is condominium apartment sales, which takes us to the third point that we need to focus on. Condominium apartment sales in December, I know this number will sound remarkable to say the least, increased by more than 75% compared to the number of sales that took place in December of 2019. For a number of months, condominium apartment sales were declining. And of course, with the decline in the sales, we also saw a decline in average sale price. Well, I guess the average sale price got so low in December that people decided to get back into the market. Conversely, they may have also been looking at the average sale prices in the 905, which are getting up there, and suddenly even the need for safety and space couldn't cope with the way prices have skyrocketed in that region during the course of the pandemic. So we saw a huge number of condominium apartment sales during the month of December, as I said, 75% more than the year before. But we saw a decline in average sale prices of condominium apartments, and particularly in the central core, where they've declined by more than 10%. So you combine that decline in the average sale price with a huge number of sales, that brought the overall average sale price for sales in the 416 region much lower than the sale price in the 905. Again, that's a variance that we haven't seen before. There was also a year-end factor that we have to keep in mind, and this sort of takes a look at the entire year's performance. More than 95,000 properties were reported sold during the course of 2020. That's an incredible number when you think that in the month of March, when the initial lockdowns came into effect, the real estate market came to a standstill. And it stayed that way right through the second half of March into April and then into early May. We didn't see a pickup in the market until the latter part of May. And by that point, we've adjusted to the protocols, we've adjusted to people doing a lot of virtual viewing of properties, fewer in-person activities taking place in properties. But once that adjustment took place, the market just skyrocketed. It was, of course, helped by historically low interest rates. And that skyrocketing of sales has continued right through, as I've just said, right through to the month of December, where sales were up 65% more than they were December of the previous year. So in total, we saw more than 95,000 properties reported sold. Last year, we only had 87,000 properties reported sold. This year's 95,000 sales was the third best year on record, for property sales, notwithstanding that all of these sales took place, for the most part, during the course of the pandemic. So what does this tell us then, looking forward into 2021? I think it's safe to say that there were three motivating factors in the marketplace. One, historically low interest rates. At one point in time, you could get a variable rate for less than 1%. We've never seen rates like that before. Secondly, a very, very strong stock market, and just days before this report to you, the stock market actually broke records and broke the 18,000 point threshold. And thirdly, government stimulus. Government has been pumping money into the economy beginning in late March, has continued to do so through the course of the year. And all of those three factors, the low interest rates, the stock market being strong, and money coming into the economy through government spending, don't appear to be going anywhere. So if those were the three major factors that stimulated the housing market in 2020, after we got adjusted to the lockdowns and to the various restrictive health measures, then there's absolutely no reason why, certainly for the foreseeable future, that the market should be anything different than what it was in 2020. The one big difference, it'll be less jagged. It should be a little smoother without all of the huge drops that we saw in March and April, and then this like a meteor shooting up in the month of June. Also, with the hope associated with the vaccine that's coming, that should further stimulate the marketplace, and the acquisition of assets, housing being one of them, is going to do nothing but prosper in certainly the first half of 2021. So that's your December market report. I look forward to seeing what happens in the first month of 2021 and following the market through. And for more details on the market, you can go to our website where we have a December market report where we'll continue to provide you with market information as we work through 2021. So until next month, thank you very much.